This is my second consultation call with Trade Brigade. This is episode 2, part 3 of the new series I'm making. And today, Trade Brigade is going to be giving me his input after I informed him that I prefer taking high quality setups and I don't look for trades too often. So I'm a low volume style type of trader. Now, uh, 2 years of me learning day trading, I have made adjustments. I am more of a higher volume type of trader. But at this stage in my career, I was trying to figure out what worked for me and I was experimenting with different things. So I pretty much would only look for the very picky stuff. And I literally would take anywhere from like 2 to 7 contracts in a month. I don't even think I went higher than 7 trades in a month, which was very low on the frequency and volume. Now, uh, the reason that I did that also is because I would take too many low quality setups that just because they look shiny. So I was trying to filter out and see what worked for me and what didn't work for me. So with that being said, don't forget to like and subscribe to Day Trading Knockouts. Now let's get into the video. Stay safe, green. Peace out, my fellow millionaire. David.
Up on my end, so all good.
Okay. Now, I guess the next thing would be in regards to the gap. You can look at it on your screen as well. That should be fine. But let me go, for example, to let me see what day. So today is the first. So I guess we can do for Thursday then 30th. And
Sure.
So me personally, I've noticed that the most success I get is when I trade less often. And when I say less often, I don't mean like I don't pay attention. Like I'll pretty much be here trading part-time every day, 9:30 to 12. I'm always available then. I sometimes do have availability in the afternoon as well. However, when I do my best personally is when I only take high quality setups, and that could be like anywhere from like 2 to 5 trades per week that are, more profitable for me whereas taking more often. This week, however, I did overtrade quite a bit, especially on Monday, Wednesday, and Thursday with those gaps. Like Thursday, for example, let me see.
I'm
So
gonna
the
zoom
third.
in. Okay.
So this week presented a situation that I've never seen it happen before ever since listening to you and taking gaps, where as we push up and we gap, we would push up like the overnight high and the opening print would pretty much be like exactly the same almost.
Mm-hmm.
And compared to when the opening print would have a good amount of distance from the pre-market high, like, we make the pre-market high and then we start a little bit lower.
Yep, for sure.
Yeah, so pretty much I would take a trade immediately, like as the day opens, because, the rules that you mentioned in your pre-market plan is once we break the opening print and don't have, any price acceptance above the pre-market high, I wouldn't know how to handle it. So since we just pretty much start going down, I just took it immediately, and then I would lose as it goes up, and then it would go down, up, and I pretty much would just like take smaller losses continuously, and I wasn't profitable this week because of that.
Gotcha. Yeah. Okay. So the essence of the question then is kind of like, how do we get involved in a gap trade when we open basically at the overnight high and there's no test above first, right? Is that kind of the
Exactly.
essence?
Yeah. Exactly. Like, real quick, a good example that I do want to make is after the week of the banking crisis and everything. Remember how it was Wednesday he made the announcement, right? Yeah. And then Friday we had a big sell off again, and then the Monday it was a big gap and it was really volatile, and we went up a good amount also. That was my first successful gap trade that I took, where I actually came with like $100 profit, and that was the first time that I ever took. Like, that's like ideal to me, and it's easier to handle. But this one was different.
Mm-hmm. Yeah. Okay. Cool. So let's focus on the Thursday one, and then we'll go back and talk about some other gaps as well, because there were a lot of gaps this week, obviously, and quite an interesting week to say the least. So whenever this situation unfolds like this, there's really two ways to get involved in the gap when we have an open that's basically at the high, right? So the first way is the most aggressive way, and it's something that I don't often recommend, especially in this market environment, because volatility has been so high recently. This first method oftentimes will lead to you just getting stopped out almost instantly. But the first method is to just watch a 1 minute chart. And on a 1 minute chart, draw out the first 1 minute high, the first 1 minute low. If we break the low, you go short. If we break the high, you stop out.
Okay.
Sorry about that. It's like,
No problem.
whew. You know when you got a sneeze coming and you feel like it's about, you're about to sneeze and then it just doesn't happen. And then you're like, okay. Anyhow, that's annoying. So no sneeze, but we're back. We're good. So that's the first method, the 1 minute high and 1 minute low, right? You basically enter on the break of the 1 minute low, assuming that there's just downside momentum, assuming that the overnight high is secure and it's basically, not going to break. And again, in the current environment, because the market's been so volatile, typically like this 1 minute high is going to get, you're going to do something like this before making a move, be it up, be it down, doesn't really matter. But, the 1 minute bar method used to work. I would say like pre-pandemic, pre-COVID, the 1 minute bar was a pretty good setup. Now, going forward, and what we're dealing with now, it's still a valid idea. I think that it can be used, but what I would prefer to do on days where we're so close to the level is just saying like, okay, if there's not going to be an obvious test of it first, and by obvious test, I just mean like if there's not going to be a small pop and then rejection of the level, if that opportunity doesn't really exist, then we're just instantly on the open going to be looking for a bearish setup. And a bearish setup could be an opening range breakdown. It could be a bear flag. It could be a 3-bar play. It could be a number of different things. But instead of looking for longs up here, we're looking for shorts. So just pretend that you're coming from a preceding downtrend instead of up, because we know the psychology up here favors poorly positioned longs closing out, adding selling pressure. So we're just pretending that the market is in a condition for a downtrend to resume anyhow. Now, as I'm watching, right, let's be fairly realistic about Thursday. We'll zoom way in on this thing. Like this right here. There we go. This to me was the first indication of, okay, here we go. Short setup is on the table. And this is a 5-minute chart. So we've got red out of the open, right? We're under the opening print. We are still underneath the overnight high, which is technically up here. So everything about the rules is in play, but we're waiting for a setup, right? So here's the setup. We've got now an inverted hammer, right? Here. It's not quite a 3-bar play, but you could start to call this like an opening range. If we break the low of the inverted hammer, we know that technically this was an attempt from the buyers to move over a prior 5-minute high. It failed, and we closed at the lows of this 5-minute bar. So buyers are weak. They're not getting any follow through. We're under the opening print. We're under the overnight high. We're looking for a breakdown of these lows to go short. Okay. Knowing that, we go to the next bar. There's no breakdown of the low. Okay, so no short yet. We're headed back towards the opening print. Now the setup would be, let's see if we can find a rejection somewhere up here off of 40.85 or so, right? So no longer is the entry down here yet. We're waiting for a rejection at the opening print potentially, and then a setup to unfold. So this bar goes away as being a setup candle. Next bar. Okay, this is just, it's a inside bar. It's completely inside the range of the last one. We're not making progress up and over the opening print. We're obviously still red here. So maintaining the bearish stance. And now we've definitely got a bit of an opening range, right? This is the range. So in theory, it should be if we break the top, okay, the gap is not going to close, or at least we should look for a test of the overnight high truly, and then a reversal. If it continues, then we are no longer under the opening print. We are no longer under the overnight high. The short is off the table, right? If we break the lows, okay, game on. We've just got an opening range breakdown. Treat it as you would any other opening range breakdown. Like if we were opening imbalance, we get a range, and then you break the top, you break the bottom. There's always a trade, right? The trade is aggressive traders get involved. Let's actually talk about downside because we're dealing with a fade here. Aggressive traders get involved on the literal break of the lows, or conservative traders want to see a lower high underneath, or some sort of like lower high underneath a descending VWAP or something like that. So knowing those two setups, you'd say, okay, that's what we're watching for here next. Next bar, Okay, now we're testing the open. Not really a great look, but we know that we're just avoiding shorts so far. Because of the gap rules framework, I would not be gung-ho about getting long here. I would not be thinking, okay, it's time to push the market higher. It's time to get long. On the upside, I would definitely be more conservative and say something like, this is an instance where we have an opening range. I would want the break and then confirmation high or low because of the gap rules framework before considering longs.
Okay.
Right. The reason being is we're, psychologically, it would make more sense that the market moves lower instead of higher here. So we need an extra layer of confirmation, aka that pullback that does this.
Okay.
So let's continue. Here we go. This is where things get interesting, right? Because now we did have technically a breach of the opening print. We did technically have a breach of the overnight high. But what happened, right? Strong rejection, never closed up here, never closed above the opening print, and we're right back at the lows of the opening range. So the thought process should now be, okay, this was our test. Buyers have failed. Sellers are obviously in the driver's seat. Let's go short, right? So we continue along. We get some follow through. And I can't remember if it was Thursday or Wednesday. One of the days we were very, very mindful of a partial gap fill to the 50% mark. Was it this day? It may.
I remember you were talking about in the pre-market. Yeah, you were saying to manage your expectations, I believe.
Yes. So this was the day, and the reason I remember is because 40.75 was the level, right? We were talking about this in the pre-market, how this breakout level acted as support here and should be a target. So in this particular case, right, we were patient. We waited for the opening. This is, again, how you have to treat it when we open basically at the overnight high without a rally first. You've got to be patient to some degree for a short setup to actually take the fade. Because you're right. If you did just go short on the open and you put a stop over the opening print, then I mean, technically it's not to be quite fair, it's not the worst thing in the world to do something like that. It really goes back to like the 1 minute idea we were discussing earlier as the first way to get involved. It's basically doing that is shorting it in here and stop over high of day. It's roughly the equivalent of, the 1 minute setup. But given the volatility, again, I think that there's more of a chance for this particular entry method to stop out in the market context we're in right now. So anyways, we've established this. The buyers failed at the overnight high. They failed at the opening print. We shorted through the low of the breakdown, and 40.75 becomes a first target. Now, we're not unloading the full position at 40.75. It's just it's a suggestion. The half gap is a suggestion that the market may find some buyers here. We know it was resistance. We know it did act as support. So we'll take off half the position in this particular case. So as we move lower, let's clear this up. I'll zoom back in now that we know 40.75. So boom, there's 40.75. I believe we actually said in the Discord, hey, think about trimming here. But you should be taking some off. We've got the half gap and we're at a pre-market structure. Now, again, we're not exiting the full position. So what does that mean? We should probably move our stop loss. Whenever we take profit on a trade or something like that, we've got to adjust our stop to guarantee that we've got a winner on our hands. So at minimum, break even, if not potentially over the upper wick of this particular bar to give yourself some cushion here and make some money on these last contracts as well. So going forward, we know that we produce a hammer here. This is where things obviously start to show as more supportive as opposed to just straight up continuation. Still not stopping out. Stop is either still at break even or just above this bar's high. And as this starts to happen, again, not stopped out yet. Technically, we're definitely not confident in continuation, but we're getting ready to basically pull the trigger on the stop. And of course, there we're stopped out. So the trade worked. It went to the level we were kind of eyeballing pre-market. Again, 40.75 more realistically would have been where you started unloading some of it. So, I mean, a 5-point trade, if you got in at 80 to 75, 5-point trade, that's kind of like, those are good wins in the ES. 5 points, anything like 3 or more is probably more than just a little micro scalp, basically. So 3 and more points, I'm feeling pretty good about the ES trade. Now, as we know, some interesting things happened back up here at the highs, right? Technically, as we keep going, we know that there was another rejection of basically the opening print here, 40.85. Inverted hammer, doji, never really get any more acceptance up near it. So could it have been a premature stop out? Should you have used a high of day stop? Maybe. I mean, it wouldn't have been unreasonable to put a stop over the high of day, but to me personally, I'm not gonna look at a trade that just sort of, went to an area we were looking for, half gap and pre-market structure, and hold that with the expectation that now I'm risking 1-to-1, right? Because if we entered again at 80 and we put a stop over high of day way up here, we would have had to have nailed the lows at 73. And now we're just looking at a 1-to-1 risk reward if the market comes back down to low of day. Now, granted, if we close the gap all the way, you can stack another one. And now we've got a 2-to-1, which is totally reasonable as a trade to hold. But for me personally, I think I may have expressed this either on live streams or over calls in the past or whatever, but I like to be in and out. I prefer to be exposed as little as possible to the market. I like to take my money and run, basically. So to me, I wouldn't have done this. I would not have placed it to stop here, but it's not totally unreasonable. The thing that you would have to do, like there's no way around this. What you would have to do if you placed a stop over the high of day is that you would have to stick to the stop here, and you would have to wait until we close the gap all the way to the prior high of day, right? There's no taking the position off until you either get stopped out over high of day or you hit the target at the full gap close. Why? Right? Because if this is the risk, then this is the reward, right? Roughly a 2-to-1. Might even be a little bit better than a 2-to-1, like a 2.25, 2.5, which is solid risk reward. But again, the psychology of how this bounce unfolded, I'm not staying in that. But you would have to hold for this. Otherwise, taking it off anywhere in between as this starts to push back down towards low of day, like let's say you take it off back at the low of day, what have you just done? Now this is your reward. This is your risk. It's inverted, right? You're risking way more to make way less. It doesn't make sense. So this is the psychological burden that you would have to carry if you were trying to go for the full setup and close the gap all the way. You would just have to be comfortable with, hey, we're either stopping out or I'm holding until 40.60. There's no in between.
Mm-hmm.
So that's the give and take when these particular things unfold. Now, as we know, of course, it was a slow grind all day, but we did close that gap.
Mm-hmm.
So hey, patient traders, they were rewarded. For me, I'm not interested in holding for, how long was this? 10:30 to 2 o'clock, basically, right? So sure, there might be some really great money to make in a move like that, but it's not my trading style. So psychologically, I'm not going to do that. Logically, not psychologically, but logically, yeah, of course it would make sense if you're sticking to your risk reward that this is a reasonable trade to take, and you just let the market do its thing. It either stops you out or it hits your target. One or the other happens, and you move on to the next one.
Mm-hmm.
So that's Thursday in a nutshell. Really, really interesting move. Like this is where the momentum, for me, this is where kind of like the money was made. And then it was like, all right, not really all that interested. If you're watching, like before this secondary break really happened in the downward direction here, this is really just market chop. Like the main thing in here that was going on. Look at the upper wick. Oops, whoa. Let's try that again. Look at the upper wick in this bar right here. Well, I mean, like to me, that's really dangerous. Why is that dangerous? Well, I don't know what happened first, but it sweeps the lows technically, but it also swept all these highs, right?
Mm-hmm.
So it's not really telling us who's doing what. I would say that the momentum finally returned to the market on this breakdown bar here as we head into the lunch hour for the final, leg of the market lower. This was just like noise and chop. So I'm not, that's the last thing that I want to trade. I either want to trade smooth momentum that does this and continues the trend, or I want to take my money and run and then go do something else with my afternoon. So that was Thursday. Does that sort of help explain what specifically we were looking for in here? Again, just to summarize the main takeaway, it was when we're opening so close to the overnight high and there's not really an opportunity for a test in the upward direction first, just assume we're coming from a bearish trend and look for any bearish setup. Could be a opening range break. That was what we saw here. Could be at first, right? We were kind of waiting for an inside bar breakdown. It's not really an inside bar, this inverted hammer at least, but you could imagine, right? It has very similar implications to a 3-bar play where you've got a big downward momentum bar, and then you've got, right, kind of a indecisive doji. If you were to combine the first 2 bars, then inverted hammer doji, flush those lows, it would have been the same idea, basically.
Okay.
So yeah, that's how we get involved when there's no rally first. Just assume we're coming off the heels of a bearish trend, look for bearish setups, and that's where we get involved in the downside. This happened to give us an actual test of the open and the overnight high at the same time. It's not always going to work out that way, right? You might just get, something that goes to here. Let's pretend that this test did not happen. This was just further evidence that longs here are in trouble. But let's just assume that we didn't get that upper wick. Let's just assume it was here and then a rollover. It's still the same idea, right? We rejected the opening print. We remained underneath it. Shorts are still on the table.
Yeah, no, that actually answers my question a lot, because I know you said that what I did isn't necessarily the worst thing, but due to the market conditions, since it's so volatile, it's easier to get chopped out and then stopped out, So that'll answer my question, because usually before, like, say, again, if it's not so tight, the deal of what you always preach, you can't have price acceptance above the pre-market high, break opening print, all that. But again, due to my lack of knowledge and not this being my first week of experiencing a gap like this, I didn't have a plan, which is what caused me to take losses when I shouldn't have. And I also noticed I was a little bit more impatient as well. So that actually, I got the gist of what you said about how to